Special edition of Market Makers. Stephanie said it. It's all about activism. Last hour, we welcomed Bill Ackman. Right now, Harvard Business School's Bill George and Blackstone's John Studzinski are here, and so is CLSA's Mike Mayo. Mike has embraced the trend, you might say, styling himself the activist analyst. So we're asking, who else should be speaking up? Mike, welcome.
Thanks for having me.
So you and I have talked about this. Joe Perella and Peter Weinberg of Perella Weinberg had an op-ed in the New York Times earlier this month in which they made the case that a fringe minority is dominating the activist debate and more people need to participate. Institutional shareholders like BlackRock, for example, analysts like yourself, perhaps even the media. Is that how you see yourself, or have you always seen yourself that way?
Well, first, thank you for having this panel. And I was paying attention to Bill and John's comments earlier. This is my day job. I mean, you call it activism. This is our responsibility as analysts and investors. And just because you have $100 billion of activist funds, what about the $100 trillion of money under management? So going to the annual meeting, I got back from the annual meeting in St. Louis for Citigroup yesterday. Another guy on my team was at the annual meeting for SunTrust. You know how many people asked questions at the SunTrust annual meeting yesterday? One person, my colleague, my associate. And I guess I asked...
Why is that? I mean, Michael, people love to say you're a bit of an antagonist. Do you feel like that's unfair and you're truly the activist analyst?
No, I'm not crazy. The rest of the world's crazy.
I like that. I feel that way about myself all the time. Trust me.
And Bill, this is not the theory they teach at Harvard Business School, is it? It's the reality, but it's not the theory. We need to hold boards more accountable, and nowhere else is that more important than the banking industry. I mean, before the crisis, you said let the markets rule themselves. That didn't work. Post-crisis, we're saying let's have the regulators control everything. That doesn't work either. We need to find a middle ground. That middle ground is holding the boards of directors accountable, making sure they have the backs of shareholders. And the first step is let's hold the chairman and the boards of directors publicly accountable, and the only time you can do that is at the annual meetings. Let's make the annual meetings more important again.
Bill, is Mike right that the reason people like him sometimes, Mike, I'll say it, stick out like a sore thumb at an annual meeting is because nobody else is doing the job they should be doing?
Berkshire Hathaway annual meeting is a big deal. It's a jamboree.
Two things. First of all, you know, I'm not an institutional investor, but I do think they should be much more involved with the stocks they hold. From a corporate standpoint, corporations should be talking to their big shareholders, not just the activists. I think CEOs and boards are way overreacting to the activists. I think they need to be out every day talking to their major shareholders, including the boards. It's one thing PepsiCo did. They're out talking to their shareholders. Goldman Sachs, we talk to the shareholder directly. I think that's really important to understand. Ask the question. Come at me. Ask the question. I want to know. We need to be thinking about it. You hold the stock. You own the company. You don't own, you know, I don't want to just talk to somebody that owns 0.8% like Nelson Peltz does. I want to talk to people like Fidelity and Vanguard and the big holders.
So if that's the case, to Mike's point, why does Mike O'Neill, the chairman of Citigroup, put himself out once a year at the annual meeting to face a few questions from shareholders?
Well, Mike O'Neill in the past 2 years has met with 20 investors. That's in the proxy. My issue with the big banks, they know how to get around the corners a little bit. They'll go ahead and have the chairmen and CEO meet with investors one-on-one. But my point is, we as investors can only hold the boards publicly accountable, and that's what's important. Publicly accountable once a year. A lot's been written about annual meetings are for retail investors. Yes, they're for retail investors, but they should also be for institutional investors.
Okay, then hold on, John. Could one say, if you were an insurance company, a pension, an endowment right now, could you look at BlackRock, Vanguard, Fidelity, and say, have you guys been asleep at the wheel? Why haven't you been pushing the companies you're invested in? You had their ear more than anyone.
Stephanie, there is a lot of what I call closed-door activism or behind-the-scenes activism. And by that I mean all of the people you've just named. A lot of these pension funds are thrilled with the likes of a number of the people that you've talked about this morning. They totally agree with Mike. They want these big pension funds, these big endowments want a much more critical, proactive questioning of the management. I think the interesting point that Mike is raising is that right now, this is all, the bright light has been reflected on the board, on the management rather, not on the board. And the board needs to be seen as accountable as well. This is not just about the management. It's the role the board plays in governance. And the board has avoided that well. They avoided it well following 2008. And, you know, lots of boards did a very good job of sidestepping that. Even to this date, when you look at minutes from board meetings and what have you, you sort of wonder why, in the context of the AGM, those minutes are not more public.
What's AGM?
Okay.
Annual General Meeting. And why are they not more public? And why does that not become more of a media event in itself?
Well,
I like that.
first of all, I think boards should be held accountable in all cases. And when you have a banker like Lehman, everyone for AIG forgets about the board. I mean, they have ultimately responsibility for the survivability of the company, sustainability, and where it goes. You go to a European annual general meeting, it takes 10, 12 hours. And I can tell you, you're out there. But I think this is an everyday event. My concern is a lot of the institutions are using surrogates. Okay, say on pay. They don't talk to us. They say, what does ISS say? What does Black? They don't hold any shares. ISS is not a shareholder. Why not talk directly to boards and management? You need to be talking directly to the big institution.
May I make a
not
suggestion?
Kind of working behind the scenes
That Mike and I talked about yesterday after the Citigroup meeting. There's a good reason for that. Meeting after meeting after meeting, shareholders approve the pay packages for the CEO and the executive team, and they re-elect every member of the board up for election, whether he's new or being re-elected. If the shareholders don't create the pressure, why does management and governance need to respond?
Well, because you need to be proactive. That's our job. We report. I'm on several boards. We report to the shareholders. Okay, we're responsible for the company and its shareholders. We need to be talking to them, not to middle people, you know. And the board shouldn't be talking to them. We shouldn't send our IR person out to talk to you. We ought to send out, talk to you yourself.
Should Goldman Sachs
You're not
have
such a bad guy.
more than
I
one?
can't handle you. You know, it's my problem, not yours.
Should Goldman have more than one meeting a year?
Goldman has meetings every day. I mean, they're having meetings all the time. They're out there all the time. How do you think these things happen? You know, not everything comes to a proxy fight at Goldman, if you notice, because they're out talking. Yeah, Jim Shiro, our lead director, is out talking to the major investors. I've met with the major investors in 2009 and 10, who are having all these, frankly, public relations issues and legal issues.
Well, Citigroup's a great example of this. Citigroup's had 5 CEOs in the last 16 years. At some point, you say, we need to hear from the CEO, but we also need to hear from those overseeing the CEO. And by the way, at these annual meetings, I'd like to see not just the CEO and the chairman talk. I'd like to see the heads of committees at least give a brief presentation. So who's overseeing the risk committee? You know, let's have that person.
Absolutely.
All right, we need to take a break. We're going to continue this conversation after the commercial. Mike Mayo, John Cieszynski, Bill George.
All-star panel.
All-star panel. We're digging deep. Hey, Banks, we're looking at you. And if you missed any of our interviews today, you can now watch them on Amazon's Fire TV as well as Apple TV. Stay with us.